Cryptocurrencies wild ride, the digital currency plummeting to just over 31,000 over the weekend, about 50% off of its high, reached just over a month ago. Today, we are looking at Bitcoin trading down once again, with China cracking down on cryptocurrencies and other countries looking to take similar steps. Joining us right now is Kyriba senior strategist Wolfgang Koester. Also joining the conversation all morning long is Fox Business' Dagan McDowell and former Wisconsin Congressman, Fox News contributor Sean Duffy. Great to see everybody this morning. Thank you so much for being here. Wolfgang, kicking it off with you. What do you make of this big decline in Bitcoin from the highs?
Good morning. Good morning. So what we're seeing right now is what we've been looking for, which is the increased rhetoric from the Chinese actually regarding their central bank digital currency. And the competition to them would be the Bitcoins, et cetera, of the world, the cryptos. And some corporations, not many, I might caution, actually see that as a hedge. Now, you see increased rhetoric coming out of the United States as well about developing their own central bank digital currency. And the real question here is, who's going to be the winner? Is it going to be the cryptocurrencies like the Bitcoins, the Ethers of the world, or long-term are the central banks going to develop their own digital currency, and who's going to win this? My personal belief is, and it is my personal belief is, that at the end, the central banks might be laggards, but they're going to end up winning this case, which means that the cryptocurrencies will rather go to close to worthless.
So, Wolfgang, where is China in this in terms of its goals to beat America at digital currency as well? We know that they are developing a digital Yuan. Tell me about the comments coming out of China and what that tells us about its own development, and as well as the regulatory framework that is beginning to take shape in Washington.
Yeah, no, that's a great question. So what we've seen over the last 2 years really is an evolution of the Chinese really pushing hard into the development of the digital currency. They've had increased amount of tests of what they've already developed from a technology point of view. They had, I think it was in October last, they issued digital currency, digital yuan to 3,000 people through a lottery, and then they actually had them purchase things through their lottery, through this, with many vendors around China. So they further are testing the security where they can be broken into, because that's the biggest fear of people about central bank digital currency is how safe is it? Isn't it safer to be locked up in gold somewhere in the world, whatever it is? But what you're actually seeing is that the Chinese have developed that technology, been pushing ahead on it. And quite frankly, November on Singles Day, a lot of people expected, because it's the largest trading day from manufacturing, et cetera, in China, they expected to actually release it. They have not done so. So next question is it going to be done during the Olympics? The rhetoric, and not only rhetoric, but also out of Washington, the policy has significantly changed there, where what we're actually seeing is that under President Biden now, with Yellen really in the forefront of this, Powell literally pulling in after this, is that we're now looking to develop what under the Trump administration had been put on ice, for lack of a better term, develop its own digital currency. But we're not just seeing this in China. We're not just seeing this in the United States. We're seeing it at many countries looking to develop their own digital currency. Jamaica, for example, just, not that that's a big one, but they, for example, just issued one.
Yeah, really fascinating what's going on now in crypto. It's sort of accelerated with China's heavy hand as well. Let me broaden out to the broader market here. We're looking at a higher opening for the stock market this week. Of course, this morning after real volatility last week. But you also have these pops in inflation, average gasoline jumping, even as the Dow and the S&P were down on the week. The NASDAQ was able to snap a 4-week losing streak last week. Inflation fears, however, one of the big issues for the markets. When you look at the inflation out there that you see, you're looking at an impact on real estate. How are you allocating capital?
So I think what companies are, and what everybody's doing is recognizing we're already in an inflationary time period. 6 months ago, we were talking about, can this continue? And the only reason that the interest rates are so low is we continue to print money and then purchase assets out of the government. But at the end of the day, that's going to catch up. You've got $23 trillion worth of debt. You're printing 50, $100 billion, and you can't continue to do that. So eventually you're going to have a pop in interest rates coming up. We actually are already seeing that, as you know, mortgage rates have come up already. And as the mortgage rates, et cetera, are coming up, you're going to have a harder time financing the real estate. And then what happens is typically the banks tighten up credit on this, which further does not support the real estate market. And you've seen it again and again. You saw it in 2007. Feels pretty close to 2007 right now.
So real estate, you're expecting valuations to go down then?
I actually am. Yes, I hope it's not fast, but I think you're going to see some correction in the real estate market.
All right, Wolfgang, thanks very much. Great insights from you on a whole host of issues there. We'll keep watching all of that. Wolfgang Koester joining us this morning. We'll see you soon, Wolfgang. Thank you.